Good morning. This is my weekend video, guys. Like my video if you get a chance. Retweet me if you get a chance. Write comments below if you get a chance. Appreciate all that. As long as they're constructive. Okay. So I've got a regression channel on my charts. From my last video, I mentioned this. And if you activate this channel right here, currently activate, I've got it anchored right here off of a low pivot. Okay, guys, off of a low pivot. Typically, whenever you start seeing the anchored VWAPs getting anchored off low pivots, you're starting to see more of a bearish side price action in the markets, and that's what we're seeing on the Nasdaq. We're starting to see rotation out of the Nasdaq into other areas of the market. So, typically, before in the video reported, we were anchoring. I was anchoring off of the upper pivot. Okay, and since then I've moved this anchored VWAP over for this regression channel, and it is starting to play out in a more bearish case here in the Nasdaq. So let's be very mindful of that going forward here. Now we are still we closed saving support, but we just closed right there at that support level. Okay, guys, so it can go either way first thing Monday morning. But it's just something to think about going into next week. The bearish price action that we saw into the close here, setting up for next week. Now, my primary thesis is we're coming down to 23,500 next week. So down here, that's our main test area, 23,500. I don't know if that's going to happen or not. Reasons I've seen that is how we were rejecting. We looked above this price action, okay, and then we have a weekly volume profile up here. This looks like there's accumulation and distribution. I think this looks like distribution right above a prior high breakout. Okay, this looks like where smart money was selling into strength. They finally got to a point that they thought they would sell into strength. Okay, now my fibs, and it all lines up. I have been basing my fibs off the weekly 5 SMA and the monthly 5 SMA. Okay, and and wouldn't you know it, next week, guess what? Next week, the weekly 5 SMA is going to walk up to 23,500. Okay, and these levels are actually pretty accurate right here, right now, as support right here. I mean, really, really support right here at the 60. So this is really a very accurate uh, uh, indication of how the current price action is unfolding, and that we may have hit an exhaustion high, at least in the short term, here on the NQs. So be very mindful. You see how we rejected really hard on the 1 hour at that high. So there's a lot of elements here suggesting that we might have just topped out. So we'll see what happens. We don't know for sure. Okay, the 1 hour. I've got my uh, 921.30 SMAs on my chart here. And we do have a 921 cross on the 1 hour, but it has not, on the 4 hour, has not crossed yet for the 921 cross yet. But a lot of traders, they're waiting for the 921 cross on the 4 hour to actually start getting more bearish in the markets. So just a few little takeaways that I got going on here. We do have on the 1 hour, guess what? We're stepping down here. We have a lower high, lower low. So we do have a little bit of indication here that the bears are starting to come in and take action here. Okay. Now, if you go over to the daily here, and that would daily too. Okay, let's see here. Models. See the daily. There you go. See what we're doing? We stair step lower here on the daily. Okay, but it's not the end of the world here. Our weekly is our main one because we really don't want to be bearish in the market until the weekly is showing a lower low. Okay, guys, since this candle was so big last week, we got a lot of inventory to get through. So I mean, but coming back down to the right here around the 23,500. I mean, this is a prior. I think I have to close. Can't remember. What's the close on that? 23 2. No, 23,520 was the prior open on this weekly candle right here. 23,520 right here. Of course, my cat comes in. Uh, but yeah, coming back down, retesting this prior weekly open. That makes a lot of sense to me. Okay, guys. So be very mindful here. So, but these big candles are so big. You're really not going to be bearish the market until you get down to 22,820. So on the week on week, because you got to break this candle. Uh, so what we can do this week is digest. You know, we should be looking for a digestion this week, possibly coming down to 23,500, but still digesting, setting up for a lower weekly low next week. And so that would be a primary thesis. This week should not be the end of the world. A big honking red candle to for the week. Okay, in my opinion, we should not have that. But coming down to 23,500 is a very logical scenario. Other things I'm looking at here, we know we're at a major inflection point here on the VIX volatility futures. Okay, guys, we got a double bottom here. We're trading off of it, and it does seem like we are breaking out of this double bottom downtrend here on the VIX as well. So they're at a very extremely low price. We're down here at 1450. You know, this is very low on the VIX in a Trump era. Um, so be very mindful here. That is also supporting my thesis that, yeah, we might be due for some back and fill here in the markets, and we might have actually hit an exhaustion high, at least in the, or you can call it a pit pullback in time. We're due for a decent size pullback in time here before the markets can take off any higher here. Same thesis, guys. Our weekly 5 SMA is going to be walking up close to 6,400 and even 6,400 this week. Okay, guys. So be very mindful of that. Our weekly 500, weekly 5 is going to be going up to 6,400. That's also going into these point of controls. This is where a lot of volume interacted at these price points. The bulls and bears ultimately leading to the bulls to break out to the upside. But right at that area, there's a lot of indecision. A lot of institutional trading has been hitting around this 6,400, and we might be coming back down into that 6,400 range to make a second decision. Do we really they might be trying to back test, you know, to gain more steam, to gain more money, you know. Generally speaking, that's not the case. You know, whenever you're you know, coming into, after breaking out, coming back into, uh, these weekly point of controls, generally you break below that, but that may not be the case this week. Well, my point is 6,400 is a big deal this week, and so I can actually move this bubble up a little bit because it's going to rotate this week. Okay, but my fibs, they really are acting as, see, the 60% right here. You see how we wick down right into that 60%. That's also right here a prior week of value area high. Uh, right in this zone as well. We're still well inside this bell curve, so we're not in price discovery to the downside. But I would say if we break this candle right here from a week ago, was Thursday's lows, man, we're on to 6,400 pretty quick, because you see there's not a lot of liquidity in this zone right here, and that is another, we could just be needing to back and fill, build out that volume profile, bring us down further, build this out. But ideally, I'm looking for 6,400 at some point in time this week, this coming week, and let's see how it plays out here. Okay. As far as my activate regression channel. Okay. Okay, right now I'm still on a high pivot. Yeah. There you go. I had to adjust it a little bit here. Okay, guys. So there, I'm on a low pivot right here. Okay. right there, that low pivot candle, and we're just holding that low pivot candle as of Friday's close. Okay, so be very mindful of that. I had this up over here earlier this week, but we have already broken that. Okay, guys, there you go. See where I'm getting at? You know how we're technically we've already broken that uh, the bullish. So we're actually going in a more bearish tone to kick off the week, even on the ESs here. Uh, so be very mindful of that going forward here, because on our regression channel, we are pushing out of the bullish scenario, transitioning into a more neutral or possibly bearish scenario for to kick off next week. Okay, guys. Similar situation. I anchored this off the weekly 5. I anchored this off the monthly 5. Uh, our first main test would be coming down to 64.22. That's our monthly. Uh, that would be our monthly. That's a major pivot right there. That could be act as support. Okay. Similar on NQs. We have a similar situation on the monthly. That was over there. I'm sorry about that. On the monthly, we have a major potential pivot area here at the 23,700. But so I would say with relative certainty that we're going to hit 23,700. And maybe we need to take more time and do it 2 weeks out to come down to my 23,500. But I think the fibs are the moving averages are lining up with the fibs for it to all happen at some point in time this week. So definitely keep this on watch. Now I do want to point out on the Russell, on a relative basis versus the weekly 5 SMA and the monthly 5 SMA, we are extended away from them, and we are coming down a much harder in relation to those moving averages. Okay, so yes, technically we right here at this potential breakout, we closed slightly below that potentially this morning to close the week. We're right inside of this area right here. So technically, we're bear flagging into next week here on the Russell. So we'll see how it plays out. It's not the end of the world yet, but we are getting defended a little bit here. But I would say if we opening up here, uh, below 2284, if we start opening below 2284 Monday morning, I mean, sure looks bearish to me. Okay, so we'll see how it plays out going into next week. Ideally, weekly 5s down here. Test at 2250 would be in the cards. Would be our primary target. A test at 2250 next week. And given the data from PPI and CPI, it does not suggest that we're going to get more. We really can't even justify a single rate cut at all. But we might get 0.25% in September. Just to, and I think the job market is more locked up because of Trump's tariffs than anything else. It has nothing to do with the economy in general. It's just all these companies, they just don't want to hire anybody until they see how these tariffs finally settle down. And I think it has had more damage on the hiring process than anything. Okay. So that's pretty much my takeaway on the markets. So that gives you some ideas, some targets we're looking at here. There's been enough volatility last week that I was actually trading SPX for the most part. Wasn't working on the individual things. And we do know there has been a lot of hedges put on going out to October, November, December. A lot of large hedges have been put on at these low VIX prices. So we could have very well seen the lows in the VIX. This past week, the smart money buying in with the really low VIX levels, putting on some major hedges, and now they're ready to let the prices finally fall because they got themselves hedged up pretty good. And if you didn't hedge yourself last week, you may not have much time left to do that. So, yeah, putting on some hedges is not a bad idea right down here around 1450, 15 on the VIX. Not a bad idea at all to have some hedges running in the markets. thanks a lot for listening. And, like I said, leave some comments below. And I appreciate everybody watching my videos.